Oh, yo.
Yeah.
Kids, bro, I want to have at least like 15 kids.
Man was an army.
I want them all trading and collapsing the financial market.
He's just gonna have a prop trading room filled with his own children. I used to think that, yeah, I think like a big family, like I don't have a big family, so I was like, yeah, I have a lot. And then as I've got older and just understanding how little time I have in a day, I don't know if I could do with more than one.
Yeah, but that's why you need 4 wives.
Oh, sorry, I'm still coughing, man.
The shit changes when you have kids. Like what?
I think
it,
for some people, like I've seen it have such a huge motivation factor to it. Like people really get their ass into gear, they have a kid, and then that's it. Like they've
got no choice. You like life's not about you no more, mate. It's everything I do is for them. They are my strength. You know what I mean? It's fucking hard work at times, but it's the best. You know what I mean? I'd never ever change anything in my life.
Yeah, the good always outweighs the bad.
Oh, 100%, mate. 100%.
Even I was talking with my business partner this morning. We had a meeting, paddleboarding this morning at sunrise. I don't think there's a better way to meet someone in the morning, but but we were talking just like how much there is to learn from children as well, just because their minds are fresh, everything that they've seen is kind of new, so the perspective they've got on everything is completely different than you get talking to anyone else. And I think there's a lot to learn from children. I think just observing them and going through the process of their learning with them, it gives you such a fresh outlook.
My 4-year-old girls ask me questions, which is like it makes me re-ask them questions in my head. And I'm like, what you know, like you say, mate, I can't really think of an example off my head, but there's been times where she's asked me a question and it's like I don't know how to answer it, and it's like I've rethought about the answer, you know, like you say, it comes from such an innocent, like a chat, like it is, mate. I've got her on the chart, and like you say, I'm trying to teach her young, mate. She's fucking
and
like
even
the pair
like
of them are intelligent as fuck.
The why and like even that, like just while they force the whys. So why this, so and then why that?
Yeah.
Just keep going down
you get like
it and
4
learn
whys in, and it's like, well, why is that? I'll have to look into that myself.
Yeah, but you get something like just some deep philosophical question, and you're like, oh shit.
Oh, mate, especially when I've had the joint. When I've had the drink, mate, she can baffle me mind. Like,
what's what you need? You just take some shrooms and just listen to her. She'll just take you to a different dimension.
Yeah, I've microdosed and had combos with her, and it's mad.
Oh, that's hilarious. No, I welcome when I do have children. I'm not ready. I think 100% what you were saying.
Never ever plan it. Never ever rush the process. It just happens when it happens, bro.
Yeah, like exactly. And you've got to be selfless. Like I'm not ready to give up that much of myself right now.
Oh, but the thing is, though, bro, it becomes less of a choice as it happens. So say like once it happens, bro, it doesn't matter what plans you've got. It's just bang, you're a dad, and then it's like you adjust, it's a little adjustment period, and then nothing else. You can't remember not being, you know what I mean? It's just something you can't plan in life. It's just something that happens to you, and then it's mad, bro. Your whole life just changes, but you'll never ever change it back.
Beautiful. Yeah, that's it. I'm having kids. Come on, quickly, let's go.
No worries, bro. 4 wives. I'm telling you. That's the move. If you have 15 kids with 1 wife, then she'll identify as a vending machine.
But what about like in the US? If you get one of these Mormon ones, I think Mormon can have more than like 4.
Oh yeah. I think that's the baseline. 4 wives.
You move to Mexico. That's where they have like the loads of the ranches in Mexico. They're the ones fighting with the cartels, aren't they?
But like, do you not think at that point you may as well just like, you kind of just got a load of maids around you. That's all you really got them for.
More of an addict.
Yeah. Like the idea of having one of these hectic polyamorous relationships, it sounds really good on like the front cover. But I think when you dig into it, just like Imagine they're both on there. I'm not even going to get into this. But I'm going to get flagged or something. Like, of all the things I talk about, this will be what gets me shot. So I'm not going to get into this. Anyway, let's talk about money.
Oh yes.
Let's.
Sorry,
Smash,
I'm still coughing, by the way. So apologies.
there we go. Oh, you're already on record. Okay, so I guess you're gonna edit it, right?
I don't know. I'll see how I feel.
The convos we had, the viewership is gonna drop.
No, I think they should. Everyone should know that babies equals money. Babies equals motivation equals money.
Facts,
There you
no
go.
doubt. All right, let's begin with fundamentals from last week. We had heavy fundamentals. So let's actually evaluate what happened last week. So let's look at last week. On Monday, we had nothing, no fundamentals. On Tuesday, we had unemployment rate with Japanese yen, and it's remained stagnant. So nothing important there. Retail sales has gone up, which is no surprise because they still are in QE, right? Quantitative easing. So the inflation is persisting, but they wanna, because they have deflated their economy for so long, they need to inflate it, right? So this is a good example on when you stick to a deflation monetary policies for too long. So this is 3.8% has gone up. What else is important? You see consumer confidence has gone up a little bit, the Japanese yen. What else do we have? We have, okay, then we have with the US dollar, we have Chicago PMI, Purchasing Managers Index, which has gone down, right? That shows you the in Chicago area, there's a little bit of recession, contraction, right? Economy is contracting a little bit. And also the consumer confidence is it's lower, right? Let's look at the consumer confidence. Oh, I guess they don't give you all of the stats, but yeah, it's gone lower from the previous month, right? So we do see contraction here in the economy. And Wednesday, we did have the biggest heavy fundamentals. So we had ADP, non-farm employment change. This is the precursor to NFP, right? So ADP is one of the organizations that take the weigh the statistic. So, and this showed us a very heavy contraction in the economy, right? This statistic at 106K, which is a big difference, right? If you compare the previous month and the forecast. So there was a lot of bearish sentiment going into the FOMC meeting. Then we had the ISM manufacturing PMI, which also contracted. And then we had Joel's job opening. And this was a curveball because we had growth with job openings, right? So this was contradicting the ADP non-farm payroll, non-farm employment change, right? So that was interesting. And then we had the FOMC happen last week.
Do you think, obviously we're
Yep.
still seeing growth in the job market where we should be seeing some cuts if everything was working the way do you reckon there's still some sort of backlash from COVID where we had a load of people that were let off and there's still a lot of hiring going on to sort of hire back those positions that were let go during COVID?
Yeah, definitely. But like, if you look at the interest rates that they hiked, I think it was the highest hike of interest rates in the last 50 or 60 years, right? So there should have been some contraction because it's been long enough, I feel, for the hiring and everything going on. Because if everything is contracting, even if the purchasing manufacturers, right? Like, for example, the purchasing manufacturer index shows it's contracting. That means business is slowing down. So why are people hiring more? How are job openings more, right, at this time? Because I think the growth is the enemy at the moment when it comes to the currency itself. It has to contract. So it's quite interesting because now we'll look into NFP in a minute. So
it's very contradictory, isn't it?
Yeah, that's the thing. And like you mentioned, and a lot of people mentioned that there's so much manipulation with the statistics. I think it was you who attached an article mentioning that BLS, the Bureau of Labor Statistics, they changed how they take in account the job openings with NFP. So there's a lot of manipulation going on, and there's a lot of things up and down because that's what happened with the FOMC. So let me get into FOMC. The first thing first, they announced 25 basis point hike. As expected, the market had already priced this in. So there was nothing shocking, right? So this was probably the first rate hike, which showed that the Fed has slowed down the pace of rate hikes. So we got a 25 basis point hike, right? And the most important thing was now the press conference of Powell's comments. Let's look at it together. We have a lot of comments, but let's look at the important ones. See, he already mentions the full effects of rapid tightening is yet to be felt. Yeah. So that means he also mentioned that they're not going to pause the rate hikes yet. It's yet not foreseen. At least in this year, they don't yet see it, which is actually a bullish sign, according to me, right? But the market reacted bearish. So I'll show you why in a moment. Let's see. So see, they do mention we will likely have to maintain restrictive stance for some time. Appears to be subdued. So yeah, this is the important one. See, they mentioned job market again and again. It's extremely tight and robust, right? So that means the job market still hasn't felt, and they also mentioned it's out of balance. So there's a lot of catching up too with the labor market yet. So they do mention the pace of job gains has slowed, but yet this was before NFP, right? So they do not have the NFP statistic while they're giving this, but they have a heavy emphasis on job market, labor market. He kept on mentioning the same things over and over, right? So that's a statistic. If you remember in the group, I mentioned statistics to keep an eye out on. Is one of them was the labor market, right? Anything to do with the labor market. And also you mentioned long-term inflation expectation remain well anchored. Basically, he says it's in control, which I think is BS, but let's look at the other stuff. So he says inflation data over the past 3 months show welcome reduction in the pace of increases, right? But if you remember our inflation data, when we started breaking it down, there was manipulation in it as well with energy prices, right? So now they're taking actions based off on those statistics. And again, he does mention they need way more evidence to be confident that inflation is going down, right?
See, this is like they're sort of blaming the time frame that they're recording being the issue, and that's not the issue. The issue is really the analog methodology they have for collecting data. And if you look at like, for example, China's so far ahead in terms of digitization. So the numbers that they're getting are a lot more recorded, a lot more data points. So their maths is correct. They can steer in the right direction. But I don't know how, like, it seems we've got an alignment with Fed and government, which shouldn't exist. But then it just seems almost like they're just trying to calm the market, and it's very much still like info wars. They're just trying to not let the market get too ahead of itself, the way they're structuring all of these their speeches.
Yep, exactly. You're right, because he has a lot of weight in what he says, especially now, especially with this many retail traders and institutions with that much trade volume. Anything he says is going to be weighed in. So he's extremely careful with what he says. And the way they take the way in the statistics is all analog. So it's very outdated, as we've seen.
But these like obviously changing the methodology. This is only obviously it's a manipulation. So we're not clearly illustrating what's going on, and we're more concerned what the number is. So it's just financial manipulation, financial engineering, where they've set a target and they're just going to manipulate the numbers until they get there.
Yep, exactly.
But that's the consumer is the one who's going to be suffering.
Yeah, by the end of the day, consumers are going to take the pain, right? That's the point. What else do we have? Reducing inflation is likely to softening. See, so he keeps mentioning this in every single speech. History cautions against prematurely loosening the policy, right? So he needs, that's what he mentions. He has to be extremely careful before he pauses the rate of pauses the rates, or even starts cutting rates, right? So this is something he keeps mentioning. So he does mention, see, we will stay the course until the job is done. So we still have a lot more of rate hikes to happen, right? Because at the start of the year, a lot of people were expecting the rate hikes to pause by the mid of the year, right? So we still don't know what's going to happen. But for now, he has mentioned that it's not going to happen. What else do we have? Okay, let's look at a few more comments before we call this ends. Let's start from the top. I think there were a few comments here that so he does mention that they have to weigh in every statistic between this meeting that happened and the next meeting, because they themselves do not have the proper outlook, because like they need to hike the rates and see how the economy is performing. If it doesn't perform the way they want it to, they're gonna hike it aggressively or keep it the same or even pause it, right? See, here he mentions, according to current outlook, will not be appropriate for rate cuts this year, right? Market, see, this is an important one. Market expects inflation to come down quicker than we do. That shows you how euphoric the market has been, right? Because they've been printing money for the last 14 years and you expect it to change over the course of a few months. No, right? So the market has been extremely euphoric, and this is a good comment he made. So he mentions there will be there's a subdued growth and no recession, which I do not know how accurate that is. Maybe he just wants to calm the market down with recession fears. See, he does mention we have a different forecast from the market, right? The market is very euphoric. And he also mentions, I do not see us cutting rates. We will play into our policy decision. So he doesn't see cutting rates yet. So that's important as well. So they're still staying in the hiking. They're still going to keep on hiking rates, right? So he doesn't see the signs of any wage and price spiraling, right? So wage, for example, if the wages drop or the prices go up, that starts causing a massive spiral in the market. So he has to, their job is extremely difficult. It's not an easy job. So they have to be extremely careful with what they do, right? See, they cannot allow this to happen, because once you see it, it's too late. Assuring me there was an important comment he made on disinflation that I want to show you. Let me see, where is it? Oh, we saw this one. This one. See, again, they mentioned 2% inflation target. So we're still far away from the 2% target, yeah. There we go. I don't think it's over here either. 1 second. Let me find this out. Three-month. So this is extremely important. If you're trading the market, you gotta analyze his comments. Even go actually watch the actual speech. That is going to give you an idea of how the markets are going to react from this FOMC meeting to the next, and what statistics to keep an eye on. So this is an important one he kept mentioning. This is a statistic. The housing sector, right? So he says there has to be some stability here as well. And he also mentions unemployment will probably rise, right? That's what happens when the economy contracts. But at the moment, we don't see rising unemployment. And also, let's see, he mentions we don't see weakening labor market yet. So these are two statistics to keep an eye on. There was a particular comment he made on disinflation that's what caused the market to go bearish for a while, for the last for the 24 hours, right? Oh, this is an important one. So Congress must raise the debt ceiling, right? We just saw debt hit an all-time high at $930 billion, which is crazy. And he also mentions that the Congress has to raise the debt ceiling. Yeah. Which kind of, that's interesting because I think that's kind of contradictory with because I think he maybe wants them to print more money. That's kind of contradictory. What do you think, Aaron, with the debt ceiling, increasing the debt ceiling?
I think I've given my thoughts on this before. I think still right now it's too early for the debt, increasing the debt ceiling to actually mean anything. Look at every single time that we've increased the debt ceiling, it doesn't make a difference. And that's because we live in a unipolar world. So as long as the US is the global reserve currency, they're in a position to increase it as much as they want and feel very little consequence behind it. I think it's very much I would say like buzzword, the debt ceiling. Like we talk about deficit, we talk about debt. I think in other markets, this is it means something because you're basically against the US dollar. So with the US dollar doing it, it means nothing. I think once we start to get more competitive reserve currencies out there, which we are moving towards, I think a multipolar world is apparent now with Russia, China, India. You obviously got the BRICS currency. You've got some various gold currencies that are coming out. So there's positions for different reserves and a more diversified basket of reserves as well. So no, I don't think this makes a difference. I think they can keep on increasing the debt ceiling until we get to a point where there's enough trust behind BRICS and enough development behind it. And in terms of timing, we're seeing a lot of adoption. I did have a conversation with someone from India who said Saudi's next, and that will be a big one. The Saudis been on with the US is one way of putting it, but I would say under US for a while, from more of a security standpoint. But Saudi in recent times has kind of been moving away, developed a lot of independence. They got huge plans as a sovereign without oil. So from investments that they're making, I think Saudi's in a position to do it. And I think that would be a huge shakeup across the whole macro economy because it's a huge oil power. We start to see when they start to move away from trading all of their oil in the US dollar, that's where the US dollar is going to start to crack. And we'll see. It's going to be another FTX situation.
That's interesting. I think that's what will happen once the power shifts towards the east. The debt bubble will eventually burst, right?
Yeah, look, and it's happening. It's happening slowly. I could be saying it now, and I could be saying the same thing next year. That the result is it's going to happen. It's a matter of when. I think right now, from where we stand, it's 5 years away. Like we're still early. Is that the way of putting it? Can you say you're still early?
Yeah, quite early. Yep.
Like we've seen the pivotal moments. We've crossed all of the pivotal moments where. And now I think this is it. This is endgame.
Yeah.
Wow, look at me bringing in what negativity, positivity. We do need more stability, and I think this is the way we're going to get it.
True. Yep.
I think we'll have to change up our whole trading strategy when this happens. Can you imagine? Like right now, it's very easy for us to just track US monetary policy and make trading decisions. That's generally what we're looking at when we're reviewing fundamentals. Yes, we look at GBP and if you're looking at the forex market and other currencies, but your main point of information is the US market and the US media. So once we get all of these multi sort of reserve currencies and we have this multipolar world, the amount of information that we need to process to trade is just going to be incomprehensible, which is why we probably need to rely on AI trading bots now.
Yeah, probably. That's what I did mention. I think once that takes over, there'll be fewer pairs in the market, and I think forex trading will eventually go off. There'll be no more forex trading. I think it'll be commodities and indices, and probably even indices based on the BRICS economy, right? So yeah, we will have to adapt when the time comes. And you're right. It'll be a little bit hectic to keep in track all of the economies because it's one currency with so many economies. It's like trading the euro, but more bigger, right? because you have to keep an eye on all of these economies.
Exactly, and all of their monetary policies. And I think there's going to be so much to learn. Like we haven't seen this before. So if you've got two major reserve currencies that have, let's say, equal dominance, and they've got, I don't know, counter monetary policies or monetary policies in the same line, what kind of market reaction there is. So there's going to be huge learning curves here. People are going to be hypothesizing. There's, once again, it's a timeline thing. We'll probably adapt as it's coming in.
Yeah, I mean, it's always better to be early, and we'll be early, so we'll be the one of the pioneers in this industry.
Chicken dinner.
All right, let's look at the last. This was the one I wanted to talk about. So he mentions we can now, for the first time, say that this inflationary process has started. So this is what started a lot of traders to start weighing in disinflation. And if you remember, he mentioned the terminal rates will be at 5%. And due to this rate hike, we are at 4.75%, right? So when initially he said this, there was a lot of bearish volume in the market. And we saw, I'm going to show the Dixie chart in a minute. But that main support that we've been looking for a while, for a minute, broke, right? So he does mention there'll be a couple more rate hikes to get an appropriate restrictive stance. All right, so this was important. What else did he say? Yeah, say this is the important one that I said. He still says we haven't made a decision yet on terminal rates. So this is what they keep doing. They keep on pushing the terminal rate above and above. It was 4.5, 4.75, now 5. Now it's going to go even more higher. So I say if they keep on increasing the terminal rate, it's extremely bullish for the US dollar. That shows you that they don't have the inflation under control. So this is extremely important. This is something to keep an eye on, this statistic here, terminal rates. What else do we have? So yeah, that's probably the most important things, according to his comments, I say. So to me, it was bullish, right? Like all the comments with the outlook was quite bullish, but when he started mentioning disinflation and such, the market started losing it, right? So that shows you how euphoric the market is. Just basic statistics without reading into it, they start taking decisions based on it. So that's what was with FOMC. So keep an eye out on those statistics that I mentioned. Then on Thursday, we had Bank of England as well, making rate hikes, and they hiked the rates by 50 basis points as expected. Let's look at if they have the monetary. So let's see what Governor Bailey said. So he says, this is very funny to me because he says we are seeing the first signs that inflation has turned around the corner, especially with inflation numbers being above 10%, double digits. Let's see what is. So he did mention something that made British pound a little bit. Yeah, this is the. So he said we are in uncharted territory with inflation above 10%. So that showed a lot of uncertainty with how Bank of England are going to take in their policies, right? So I think the market started weighing in a bearish sentiment when it came to the British pound. Let's see if we can pick up something from here. So it's pretty much the same thing. So there was a lot of bearish.
Hang on a second.
Yep.
How is your account on Forex Factory also MM?
Yes, it had to be.
I'm gonna go back over all videos and I'm gonna see if it's there.
No, it's been so. I've always used MM on Forex Factory as well.
Always have,
So,
boys.
What else? Yeah, I don't think there's much to see here. There's a lot of uncertainty. That's what I would say with the British pound, because they are in some. Their inflation is extremely high, and I remember saying the consumer inflation, not the CPI. I think it's called the RPC. That's the actual inflation when it comes to the consumers. That was a 13%. They are at extremely high inflation, right? So there was a lot of uncertainty there. This was an important one that came out on the same day. We see unemployment claims drop, right, a little bit. So that's a green number. And if you just notice the previous few months, the previous few unemployment stats, it's been dropping, right? That's not a good thing because they want to see this go in the red, right? They need to see a contraction happen. So the factory orders dropped a little bit, right? But if you do look at from the previous month, it actually caught up. It went up, right? It went from the negative 1.9 to 1.8%. So that shows you the economy is still persistent. And the most important event of the week after FOMC was NFP, right? Non-farm payroll, employment change. And this is probably the most important statistic when it comes to weighing in the labor market. And this shocked the whole market, right? What happened was the statistic came in at 517,000. And if you look at the forecast and even the previous month, this is extremely high, extremely high. And this shows us that the market is extremely resilient, the labor market, yeah. And I remember seeing the statistic that said that unemployment as well, it's at 3.4%, and it's been the lowest since 1960s, right? That's a long time. Since 1960s, this is the lowest unemployment rate. So that shows you the market is extremely persistent at the moment. But again, we can't weigh in everything based off on one statistic. This is an important statistic, but is this an outlier? We are not sure, right? This could be an outlier statistic. We need to wait and see a few more statistics to weigh in our bias, right? But at the end of the day, we have been bullish on the US dollar from the beginning, right? So this is what happened this week. Next week, let's quickly look over it. What's important? Let's see. So we have a speech by Powell next week on Feb 7th. So this is going to be extremely important as well. And I think he's going to make comments based on NFP that happened. So that would be important to keep an eye on. We have other FOMC members that speak. So I will also take in account of what each FOMC member are mentioning, right? So we have a British pound monetary policy hearings. So very important event if you're trading the pound. So keep an eye out on this. Unemployment claims as well, important. And this is big, GDP, right? And it is forecasted to come in lower, contraction at a negative 0.3%. And if you see the previous GDP was at 0.1%, right? So this is interesting because inflation being so high, I wonder if the economy is actually contracting. So this is going to be interesting to see if all the analysts, they came to this conclusion of negative 0.3%. Let's see if it misses the forecast. I have a feeling that it's going to miss the forecast and come in higher. But let's see what happens, right?
See, one of the concerns with obviously this regime of monetary policy is GDP falling. But you might have seen, I'm not sure if anyone saw, there was something about like Rishi Sunak announcing this new plan to attract more talent into the UK. A similar plan was implemented here in Dubai, where they use the visa system to sort of offer golden visas, 10-year visas to those that had better qualifications, for example. So where, let's say, war is also another way to increase your GDP because you have a lot of immigrant movement. So whilst that hasn't really occurred, I think it may be a new way of increasing GDP in this moment. So let's see how that works. It looks like they're trying to balance everything.
Yeah, that's quite interesting. I didn't know that. So yeah, that would be an interesting to see how that affects GDP. That's true.
It will take time. Look, it will take time for you to get that much influx of new people bringing new growth into the country.
Yep, true. Yep. So if you actually do see the GDP number from the last month, Jan 13th, what happened? We had the same kind of scenario with negative forecast, but guess what happened? It did drop a little bit, but it was higher than forecast. So still in the positive, right? So let's see what happens this week. So we have preliminary consumer sentiment. on Friday, on Friday, it's supposed to come in a bit higher. So nothing, I don't think anything is more important. I think the most important this week is to look at FOMC member speaking, Powell speaking, and GDP and the monetary policy hearing with British pound. Yeah. All right. Aaron, you wanna go into crypto before I move into the other pairs?
Yeah, do you want to go into Dixie first? And then we'll
Oh
do
yeah.
it?
Actually, let's go into Dixie.
I think because that has
Come
an impact on
on.
everything.
This is beautiful. This is quite beautiful. We've been
Perfect
calling out.
retest, huh?
We've been calling this for the last few months. The whole market was euphoric shorting all over this place, and we said, chill out. Just wait for this support to see what happens here, if it holds or not. If you remember, I think I posted.
So MM's just claimed that the whole market just listened to him when he said chill out.
Yeah, I mean, it's a proof is in the details. Yeah. So
Everyone's a really good listener, and you've got a really good voice.
so that's what it's been happening, right? Like the whole market has been super euphoric, and if you go towards the previous pre-weekly analysis, I clearly mentioned that now it's time for USD to run bullish. Just basically, if you look at the candles, how they lost volume, we mentioned that price is now about to go bullish, right? So that's what happened this week, and all of our trades that we mentioned last week was based off on this bounce as well, right? So that's what happened. So if you look in the daily chart, if at first we had this fake out happen here when Powell spoke, and then we had this massive candle when the NFP numbers came in. So now I think the most important thing would be, now that the support has held, the most important thing would be to we already got a sign one of daily chart going bullish. Now we got to wait for the weekly chart to be bullish to confirm US dollar is completely bullish, right? Because it could do something like push up here and then drop, right? So we ourselves cannot be euphoric. We got to wait and see if the bias switches, right?
So what's our key level there? On the
Our key, our key level would be, I would say, at 104.
You see that channel being retested first, though, before we go up? That channel that we've been trapping for days later.
Quite possibly, yes. It can come in, retest, and pick up liquidity before moving up.
That's been a valid channel, that, hasn't it?
Yeah, it's been, see, we drew out this channel since November. See, so we've been calling out a bullish US dollar since November, since this has been dropping. Yeah. So this is a valid channel. So let's see what happens here. Yep. So 104 would be an important level to keep an eye on with the Dixie. So, okay, Aaron, you want to go into crypto?
We're going to. Do you want to open a Bitcoin chart?
Oh, you want me to do it?
Yeah, just keep it on your chart and I can just talk.
Okay, let's see.
Yeah, perfect. We're on the so nothing's really changed from the two levels that I mentioned last week, in all honesty. 21,450 is the key support level. And then 25,150 is the resistance. But I think we're getting that movement on the Dixie to the upside. So we should start to see BTC come down now. This was a complete sort of fluke pump, and as you said, the markets were super euphoric. For, I would say, a upside movement to 25,150, we're looking at the whole total market cap closing above its sort of 1.03 million 1.03 trillion dollar resistance level. So look, I think my bias is BTC going down now. We can see there on that time frame on the weekly that volume started to slow down, as well as on the lower time frames, getting a nice little rising wedge there.
Double top as well.
Double top as well. So look, we're likely to test this level pre the breakout, which I think, as I said, was 21,450.
Yep.
But look, it's choppy at the moment, so it's inevitable. It's coming down. There's nothing really that's going to drive it up in the coming week as well, fundamentally.
Yep. Exactly. This looks bearish. I think. How would you short? Where would you take your shots depending on this?
I'm expecting this to squeeze upwards to that level there at 24K.
Yep.
And that's probably where I'm going to look to maximize my short value.
All right.
And then that
Yep.
obviously I said as that key level is 21,450. So that's where I'll be looking to take sort of my first TP.
21,450. Yep, around here. Yeah. This
I
is
think depending how I feel at the time, but I'll probably take a portion of those profits back into BTC spot. These are still very good levels, good discount levels to be accumulating. So at this level, I'll be putting down spot positions in both BTC and ETH.
perfect. Yep.
So you'll short to your target profit and move them targets into spot buys.
Yeah.
Yeah.
Look, I'm at this moment, like it's an accumulation phase. I think yes, it would be nice to see us go down to 15K, 14K. But 20K is still a very nice accumulation level considering we've had highs of pretty much 70K.
That's what I've been thinking about, like these gaps lower down. Could they not be filled in a
Yeah.
future economic crisis?
Yeah, of course. But also
That's
think about from
weird.
the perspective, like we filled a gap just on our bearish descent now around, I think it was around the 17K level, but that was created in March or April 2020. Like
Yep.
we filled a lot of gaps through this bear market. So yeah, it's possible. But remember, I said when we were sitting around 18K, the on-chain analysis was stating that most of the, I think it was 80% of like wallets, BTC wallets weren't moving. They were long-term holders, that kind of insinuated. So if they're long-term, it really makes you think could that have been a level if these people's sentiment is there. You don't really know how leveraged those individuals are as well. We had the introduction of margin, so you've got the likes of all of these sort of MicroStrategy, etc., who've got significant margin positions, but they're I think they 6K I think is there when they get margin called now.
Yeah, that's where I'm going to be spot buying.
Yeah, they set it a cable over MM's prediction.
It would require a huge sell-off. Like you're asking a lot of long-term holders, so that's a big fundamental. I think from a strategic financial engineering perspective, how they've structured their debt is probably perfect, because he might be as close as possible to never having to be margin called on it.
Yep.
Anyway, let's go to ETH. That's some interesting. ETH
There
is
we go.
ETH
That's
is
nice.
performing. It is performing well.
This is the weekly chart.
I think we're going up to see 1740 in the next few days. That seems almost inevitable. There's a clear outperformance of ETH over BTC. I'm saying flippening is coming. I think from a fundamental perspective, we've got the Shanghai upgrade. So that's upcoming in March, this March coming up. And I don't know if anyone knows, the Shanghai upgrade will basically allow any of those that have had ETH staked from as early as December 2020, when they started to begin the staking process. It will allow them to unlock. Now, two perspectives here is this is a short-term pump. And once these people do, let's say, have the ability to unlock, that they will sell. But if you think of it from the perspective that they've all got in from the long term, they've held in that staking position for 3 years.
Did you hear Russia's largest bank, Sberbank, that they're launching a DeFi platform on Ethereum as well?
Yeah, so that was interesting as well. So they're working on Ethereum. Also very interesting because Vitalik's quite anti-Russian. So I believe that is quite a state-owned bank. But once again, Ethereum is significantly decentralized. They don't have a decision on who builds on it.
This does look like a strong area of resistance, right?
Yeah.
And if you look at the daily, we see how the candle is kind of losing.
Starting to lose volume.
Yep.
I think at most we'll see 1740 before coming down. That seems to be the heaviest resistance.
Yep. So we're around here.
But what's the 4 hour saying? You just want to go over there. Yeah, so it's still reasonably choppy. We're kind of clearing here. It's the weekend though, so as you see, that candle has 0 volume.
Yep. All right, so that's with crypto. Then let's get into indices then. Indices. So nothing's actually changed with indices. It's been inside that choppy range we outlined last week. Let's look at the weekly chart first. So what do we see with the weekly candle? It stayed inside the range and it was a choppy week, right? Look at the body. This is a doji candle and indecisive doji candle, right? You see the wicks. So it's been inside that range and nothing has actually changed completely with US 30, with Dow Jones. And let's look at the daily chart. So the daily chart shows us that price did move up bullish, lost momentum here. And I think this is FOMC Wednesday, right? And it started now making that decline that's correlated with the Dixie, right? The dollar index. So we see, I think the safest thing to do still, I believe so, is to stick with these areas that I've put out, because I want this range to break completely, because you don't want to be caught up in choppiness, right? At the end of the day, it's all probabilities. So I would still, again, this would be the same areas that I would wait for if I'm going to be trading US 30. Yeah. Yep, I think so. This is quite clear, right? So that's nothing. Nothing has changed here. Let's do that. SPX, S&P 500. There we go. S&P 500. Let's look at. So S&P is bullish just by looking at the weekly chart. Yeah. So last week we mentioned that we were hoping that price would pull back, right? Pull back depending on the Dixie bouncing here. But at the moment, that day, price actually went up to grab more liquidity before the FOMC meeting happened, right? And now we are starting to see some pullbacks happen, right? Let's look at the charts. So I think the safest would be still these areas. Why? It's because I want the trend to switch. Once the trend switches on the weekly and the daily, right? The daily trend would switch here. Then it will start being a higher probability short positions. For now, I think it would be best to not trade it till we come again to the same areas that I've mentioned. Yep, these two areas, I think it's perfect. Let's just wait for these areas to break. Yeah. All right, let's look at GU now. Let's look at GU. GU has been interesting. So GU depends on who took shots last week, and the opportunity came in a lot late on a Friday. So it did work out in our favor last week, and it did perfectly drop. We mentioned that price slowed down and it's time for price to pull back. This is why we put out short opportunities for GU, right? So what are we seeing at the moment? We see the weekly structure point break, right? That is starting to show us signs of the trend wanting to switch bearish, and also what do we see? This is a massive bearish engulfing, right? If you remember our classes that we did, this is a nice entry candle in a way when it comes to the weekly time frame. Let's look at the daily. Let's look at the monthly for a minute, actually, because the monthly did close last week as well. And the monthly, if you do see the monthly, nothing crazy happened, right? What do we see? The yearly trend line resisting. Price is using this as the resistance, this area here at 1.24, right? Around the 1.24 area. So nothing crazy happening over here. But I guess the weekly and the daily will probably give us a clearer understanding of the market. The monthly is not as clear. So now what I'll be looking for this week when it comes to the weekly chart is to see if this weekly structure point, right, holds. And if we can get another move down, maybe even all the way down to here, possibly, right, around here or here. So that would be important. Let's look at the daily chart. Daily is nice and clean, bearish candles, right? If you remember, we mentioned that the consolidation of this area has to break. Where is it? This area needs to break. I need to break properly, nice and clean. Kind of even made a head and shoulders, if you do see, right? And then dropped, right? So possibly price, there's a possibility price can come up all the way to the daily structure point, and the neckline of that head and shoulders somewhere around here, which will be at 1.23, let's call it 1.23. But I think the higher probability position would be to wait for price to retrace, do not take any trades, maybe, right? And then wait for to see if price retraces or if it uses this weekly structure point as resistance, right? So let's see, let's call this 1.21. So there's heavy likely that price can pull back for the first 1 or 2 days of the week, pull back all the way here, and then drop. And probably when it closes, we might see a massive wick towards the upside with a bearish candle down. So if this happens, it retraces and comes back here, and then it finds its resistance. That would be even a higher probability short position. Yeah. But as some of you guys are trading the Profirm challenges, maybe even look into this area here, right? This head and shoulders neckline area at 1.23. Because you don't have the luxury to just wait out, right? So look at these 2 points and see if the trade makes good sense, right? So yeah, this would be it with GU, I believe so. Let me look at in the lower time frame. So that's nice and clear. That's beautiful. You see how price is now slowing down, and again slowing down. What do we expect? Price to pull back, right? So let's see what happens with GU. All right, let's look at GJ now. GJ has not done anything yet. Stuck in that range for a long time, for the past since December, right? So what do we see with GJ? GJ has been bouncing around that 2 ranges we mentioned the last week as well. Even the previous week, it's been stuck in that range, right? So the best course of action here is maybe just to wait it out, wait for this range to break, just the same points, right? But if you want to take it, be extremely risky. I know a few traders who were kind of risky here, and instead they didn't wait for this range. When price came through here, they did not wait for price to break through. Soon as they saw price started finding resistance, they started shorting consolidation, right? Shorting this area. But you have to be extremely skilled at trying to trade consolidation areas. So the higher probability would be for price to break through those areas, right? And we had Bank of England that happened, right, last week on Thursday, and you see how we have that massive bearish candle. So there was a market sentiment with that. Right, very choppy range. So I would suggest to not trade GJ, or if you want to be really risky, actually the points I've mentioned could be, for example, if it comes towards 156, 250 and finds support, then you can maybe even long it to the next consolidation point towards the top. But that's a risky move. I would suggest to actually wait for price to break through, right? Short here and then long here. Let's look at gold. Gold has been extremely interesting. It perfectly worked out according to our weekly analysis. Okay, I remember perfectly mentioning that now it's time for gold to also flip bearish, not because only of the Dixie. We saw the price perfectly lose momentum. We mentioned that it's time to maybe start looking at short positions. So the weekly candle is nice and bearish, but what's at the end of the day, the trend is still bullish, right? The trend will only switch if price comes down here. But looking at the weekly chart, it is still bullish, right? So there's a possibility that price can come all the way at this structure point here. And this would be probably the most important point to see what price does. This is around that 1800 area, right? So 1800 would be a very important point to keep an eye on. Let's look at the daily chart. So the daily is also nice and clean, made double tops and dropped, right? So possibility price comes up to retest and then drop as well. This worked out perfectly. I mentioned that taking short positions around that 1920, even at 1905, we would probably be targeting this area, but price even dropped even further, all the way here, right? So if you notice this structure point here, it broke through, never retested. At the moment, it is retesting it. Yeah. So that would not be a high probability. I would say wait for price to, if you want to short this, I think you should wait for, let me actually draw it out. Just like the head and shoulders we had on the GJ, or no, on GU. If you notice, price has, 1 second. Price made double tops, that M formation that we like. Possibly price can come and retrace all the way towards the M formation area, right? Retrace and then drop, right? So if you're trading the challenge, the Profum challenges, you don't have the luxury to wait for that too long for price to reach all the way through. So maybe possibly you could probably wait to see if price can come up here and find a resistance, right? And this would be around the 1920 again, around the 1920 area. Right, that would be position one there. Let's look at the lower time frames. Maybe that can give us a little more clarity. Yep. What is the lower time frame starting to show us? Price is now weakening, and we might probably pull up. Right. We see how the candles are nice and dying off. The volume is dying off. We probably now will be pulling up around here. Yeah. But let's say in the case that price doesn't actually come here and find resistance, right, and starts going up, which is highly possible as well, because the higher time frames, like the weekly, looks bullish. Even the monthly looks bullish, right? So, so if price does do that, I would say wait for this area to completely break off, and this would be at 1950. If 1950 can break off, then you can start looking at long positions, right? And this would be higher probability because all of the time frames are aligned. Right. So this is how I would look at this week with this chart. Let me look at monthly for a quick minute. Yeah, so the monthly chart, the previous monthly chart was bullish as well. And what do we see with the previous monthly chart? Price has been, this area has been a very strong area of resistance over and over, right? Now if price can actually move all the way, go all the way bearish, all the way here, this would be a confirmed triple top. But let's see what happens, right? We can't predict, we react. So yeah, that's what I would say, right? And unfortunately, if you do not get that retest that I mentioned here at 1920, probably price can move all the way down to the structure point. If price reaches that 1800 area, now would be an interesting time to see if price can break through this structure point and go bearish or find support here. If it finds support here, you can maybe take long positions, or if it breaks through, maybe start looking at short positions. So I think I've mentioned four areas here. Yeah. So keep an eye out on those. Yep.
Would you say obviously with gold now, would you say gold and BTC are almost correlated?
Yeah, there is a percentage of correlation with both the pairs. Not all the time. Let's
So
look
we
at
see
it.
that double top on both pairs, you know what I mean? And then obviously, are we about to see that big same move that gold's done on BTC?
Yep. That's what the BTC is starting to look like commodities charts, which is actually a good thing, because the market is starting to have some trust in BTC, right? So yes, there is a correlation, but it's not all the time that I see that, because gold does really well during times of recession and stagflation, right? BTC, if this does keep on moving up, that would be extremely nice, really good. That means the market likes to invest in crypto, BTC, even in times of uncertainty, right?
Yes, it becomes an asset like gold.
Exactly. But if that doesn't happen and it crashes, then that's not a good sign, right? And that's what, if price can break through this 2022 low, then I think we might be heading down all the way, probably even to 12K or even under 12K.
Yeah. So I can buy loads then.
Yeah, if it does drop around there, I'll be going in heavy. And if it does go up, no feelings hurt, right? Because at the end of the day, we're traders. We don't have to worry about spot buying as much, right?
Yeah, just short it, mate, didn't it?
Yeah, I mean, the way we make our percentages are are unnatural. Like the market doesn't understand how we make so much. Like we make 5-10% in a trade sometimes, which is crazy, right? These people wait for a few months to a whole year, especially with crypto. If you look at BTC chart from the all-time highs, let's look at the percentage move. So you see the whole move. If you actually bought or even spot bought from this area here from down, that's like a 10% move, right? So they wait for 10% move and we make 10% in a trade, or even 2 trades, right?
Yeah, as you say, it's just understanding risk management. Once you understand that, you can do them things, innit?
Yeah, exactly. Like imagine me, at least me, my mentality is like you can't time the bottom and you can't time the top, but if you can see the trend switches in all the time frame, that's the time to buy, right? Or even the weekly or the daily, the areas of interest. Because at the end of the day, imagine me buying here and price drops all the way to 7K. I would be mad. Because I don't like dollar cost averaging. I like going in heavy at one price, 1 or 2, 3 points in the market.
Yeah, wait and see
Yeah,
a discount, high probability, and then take it.
yeah, but that's not suggestible though. That's because you don't know if price is going to reach those points, right? So I think Aaron's the way he does DCA is probably the most efficient way.
Yeah, just periodically, just when it's hitting them lows.
Yep, exactly. How long do you have with the challenge?
Just under 2 weeks, and I'm back to break even now. But I've thought to myself now, like I'm not trading me P&L, so I'm just gonna purely trade the market, whatever the market gives me. I'm not gonna worry about the time frame, and it is
Yeah.
what it is. I'll just go again. Do you know what I mean? I'm not trading to break even no more. You know, like it's just
Yep.
I've done it over and over now. Trading to break even. Now I'm focusing on trading the market and not my P&L. So I'm not worried about how much time I've got left. I'm not worried about my equity. It's just I'm gonna just keep taking the trade that my edge. You know what I mean? It's just
Exactly. Yep.
that's it. No.
You're already in stage 2 of being a trader. Stage 1 is being losing money. Stage 2 is being break even. A break even stage would be the most difficult stage in my opinion, because you are almost there and you're making maybe tiny small mistakes here and there. You just have to make small adjustments and then you're profitable.
Yeah, that's it. That's how I feel as well, bro. It's like I'm trade journaling. I'm playing like got me trade plan. Like I'm like it's like I say. Like, if I want to make it in this game, I've got to start acting like a fucking professional, and so that's where I'm at now. Like it's time. I'm treating it like a like a professional.
Yep. Exactly. That's what I'm saying. Yep. You'll get there, bro. You're almost, it's quite interesting. Under a year, if you're around that break even stage, that's extremely good progress.
Everything I do, mate, without blowing smoke up my own ass, mate. I give it 110%, and it's just that's all I see in my mind. It's just that's all I can focus on now. You know what I mean? It's I do it with every aspect of my life. If I do something I enjoy, mate, and it's difficult and it's a challenge, I'll just fucking I wanna give it me all. You know what I mean? And this trading, it's like potential footballers' wage there. You know what I mean? It's like it's I don't understand why everyone isn't going for this. It's like it's mad. It's mad. You know what I mean? It's fucking.
Yeah.
I'm willing to sacrifice. Fucking, that's
Yeah.
what I'm saying.
That's the thing. That's because you're built from a different cloth. Most people are not. They come in for 3 months and they call it quits, right?
Yeah. I understand why though. I understand why. You know what I mean? It's fucking like you say. I know I'm built from different stuff. Me, I enjoy the challenge. It's like fucking. I've been humbled many a time in this game, but it's like I just come back with a smile. But I can understand why people just give up after 3 months and call it a scam because it's not for everyone, mate.
Yeah, it's definitely not for everyone. Your mentality has to be completely different. I mean, you can be a excellent doctor or engineer and outperform your whole office or your whole city, but then they come to the market thinking that that would translate, and they end up becoming the worst traders.
Oh yeah,
So
mate.
yeah,
That's because you're the best at what you do in your field. You expect to be the best at this, and it just rips people apart. Me fucking, it's the amount of times I've been wrecked already, and like you've already said to me, like the amount of times I've literally like I've just wanted to quit. I'm like, this is shit. I hate this. This is like, why am I putting myself through all this? This is, and then the next day, I'm like, yes, I got a lovely trade, and it's to me plan, and it's like, and I'm fucking. It is an emotional roller coaster, but
Yes,
I'm
it's
starting to understand it, man.
exactly.
It is simple. It is everything about it is simple. It's just so easy. If you, it's mad, innit, bro? Like you just wait till the market gives you the exact signal that you're waiting for, and then you wait for the next one. And if you can do that, you'll make profit. It's just the amount of times I'm taking trades in between, and it's that's what I'm saying. I've got this thing where sometimes I'll be on, and I'll look and I'll see me empty, and I'll go on to MT4, and I'll just buy. Boom, like I've stopped that
Yeah.
now. I've told myself there's no more of that. There's no more like just hitting the button, and that's why I've been on MT4 and I've been my thumbs hovering over, it, and I'm like, whoa, no, like I've got that feeling in my head of where it's an impulse. You know what I mean? So I'll just close my apps and then I'll close my chart and I'll walk away. It's like I'm
Yep.
getting everything under control now, man. It's fucking it feels good, man. It feels good.
Yeah, bro. That's the thing. It's extremely simple. It's way simpler than people think. It's what we do in the middle that messes it up. We make it difficult.
Them human impulses and fucking it's all just a mess in it, mate. Once you can execute like a robot, then it's fucking plain sailing. Like, and I
Yep.
know it's coming, mate.
Yep. Exactly, bro. All right. All right, boys. Then I guess we're done. We'll talk on Tuesday then. Yeah.